Hello and welcome to On Subrogation. In this video we're going to discuss the Made Whole Doctrine and how it may apply to a medpay or PIP subrogation claim arising from an automobile policy of insurance. For On Subrogation, I'm Jason Sullivan, and the Made Whole Doctrine can be confusing and frustrating. Confusing because it's not been uniformly adopted or applied in all 50 states. Frustrating because it may result in no recovery on your subrogation claim. So in this video, we're going to talk about 7 different points or issues to consider as you proceed in your claim and when you come across a made whole defense. The first issue is, what's the basis of your claim for subrogation? Subrogation claims can be equitable, and that's an insurance carrier pays for a claim and now they stand in the shoes of their insured and can pursue the tortfeasor. It may be legal, created by the policy of insurance or the contract between the insurance carrier and their insured. Finally, it may be statutory. And in a lot of PIP states where the benefits are statutorily defined, the state legislatures also decided whether or not they're going to grant subrogation rights for those benefits to the insurance carrier. The second thing to know is, what's the state law? There are plenty of states where the state Supreme Court has formally adopted the Made Whole Doctrine. Surprisingly, there's a lot of states where they just haven't addressed the issue at all. The good news is that you can still try and recover in these states. The bad news is you may find yourself facing a claim, and there may not be a lot of guidance in terms of how a state might determine whether or not they're going to apply the Made Whole Doctrine. The third thing to know is, just because the Made Whole Doctrine exists doesn't mean that there's no recovery. There are plenty of states, and I'm thinking about Montana, Washington, Wisconsin, maybe even Arkansas, where generally if an insured's not been made whole, there's not going to be any subrogation right. However, not all states take that view, and some states, like Ohio, where they've codified the Made Whole Doctrine, and so there's a statute that says if an insured has not been made whole, the subrogated insurance carrier still has a right, but they must proportionally reduce their right of recovery in those cases. The fourth thing to think about is, can the Made Whole Doctrine, which is usually created by court cases, be overridden by specific policy language? And a state like Indiana has said yes, that is the case. Even though Indiana is technically a made whole state, the courts have adopted the Made Whole Doctrine. The courts have also allowed that policy language can override the doctrine. And in most cases, the requirement is that the policy language be clear and unambiguous that the insurance carrier's right of subrogation is going to exist whether or not the insured's been made whole. The fifth thing is, how is the court going to determine whether or not an insured's been made whole? In Montana, one of the things they look at is, what was the total amount of damage and what costs were incurred in recovering those damages. And until both the damage and the total cost have been recovered, an insured's not been made whole. Other states don't consider the cost, and they simply look at the damages. In other circumstances, they'll look at the total damages, and in some cases, they'll itemize it by economic and non-economic damages. So just to give a brief example here, let's say an insured is injured in a car accident and they have $15,000 of medical bills. Their insurance carrier is going to pay for, let's say, $5,000 of those bills under a medpay policy. The insured has $10,000 in medical bills that they paid for, presumably out of pocket, and $5,000 covered by their insurance carrier. Let's say they also have $30,000 in pain and suffering or non-economic damages. If the tortfeasor only has a $25,000 liability policy, clearly that $25,000 isn't going to cover all $45,000 in damages, and so the insured presumably is not made whole. Other states will break that out between economic and non-economic, and so the court will say, well, you had $15,000 in economic damages, and there's $25,000 in policy limits, so the first 15 is going to go to the economic damages, 10 to the insured, 5 needs to go to the subrogated carrier, and then the remaining 10 will go to the non-economic damages sustained by the insured. In states that enforce the Made Whole Doctrine in this way, it does create the opportunity for an insured or their attorney to structure a settlement. So they allocate out of the $25,000 in liability limits, $10,000 is going to go to economic damages, 15 to non-economic damages. So in our case here, the insured had $10,000 in economic damages out of pocket, and they've been made whole, but not collected $1 more. These are things you need to be aware of. When you see a claim for made whole, what were the total damages and how are the damages broken out? The next thing that you want to consider is, what's the procedure to determine whether or not an insured's been made whole? Some states, like Arkansas and Wisconsin, have hearing procedures, mini trials almost, to determine whether or not an insured's been made whole. In other states, you have to file a declaratory judgment action. So going back to Ohio, if there's a dispute on whether or not an insured's been made whole, that statute that created the Made Whole Doctrine also requires that the parties file a declaratory judgment action. So you want to understand what's it going to really cost to pursue this issue, and then consider that against your lien amount, and then make a decision in terms of how you proceed based on those economic realities. The important thing to realize is you should be talking to an attorney that's licensed in the state where you're pursuing a claim. This can be extremely complicated and very state specific. And if you're not aware of all the rules and ins and outs or loopholes that may exist, you may either close a claim where you do have a right to recover, or you may pursue and go forward on a case in which, under that state law, there's not going to be any subrogation right. Just for example, if you were to Google Delaware Made Whole Doctrine, you might find references that say that courts have never ruled on the issue, and so you might presume, well, this means that that's not a Made Whole Doctrine state, and I have a right to recover. But it's a PIP state, and there's a statute, 2118, that creates those statutory rights. So what does this mean in plain language? If you have a subrogation right, that right's not going to kick in until your insured's claim has already been resolved or settled, and it's only going to kick in if there's still remaining liability limits available. So it's very important not to just go through and check off a state as made whole, not made whole, right of recovery, no right of recovery, because there are nuances within every state in terms of how they're going to apply the rules and what they're going to consider in determining whether or not an insured's been made whole. So I hope you've enjoyed this video and found it helpful on the Made Whole Doctrine. If you're interested in other free subrogation resources, please click the link below to subscribe to On Subrogation. I'm Jason Sullivan, and that's the long and short of it.